What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why on earth tomorrow is going to be another massive day for the markets, for Tesla, and the economy going forward, because we have the GDP report coming out. We also have some massive earnings reports as well that are going to be very important for our economy and the stock market going forward. And before I break anything down about why tomorrow is going to be another massive day for the markets, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. Not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo with the link down below and deposit $100 into the account, you're guaranteed 10 free stocks, each worth up to $2,500. And you could always sell these 10 free stocks for cash and use that cash to buy some Tesla shares for free in this limited time offer that ends in just 4 days. So please check it out before they run out. With that out of the way, let's get on with the video. So when it comes to Tesla, there are some very important things that could affect its price action. This thing did make a better move than I thought it would. It actually pushed up over 6% for the day, which is a little bit surprising considering how the market moved. But this is kind of like how Jerome Powell kind of pumped the markets given everything that was going on. So to make this clear, we had the FOMC meeting today, and we saw the Fed announce that they're going to raise the federal funds rate by another 75 basis points, which was most likely what would have ended up happening. Now, most of the damage or the price action was already priced in, so the market did respond very positively to this, and I told you guys that I saw this being very likely. I did tell you that I thought it was very likely Tesla and the markets would close green for today, and that is what ended up happening. Now, even though some people are seeing this and they may be getting very excited right now, I recommend not necessarily letting your emotions get the best of you, because I don't see this move really lasting that long. I think it's more likely that Tesla and the markets are going to come back down pretty soon. And I want to show you why I feel that way. So, just to give you guys more context, tomorrow is a massive day because we have the GDP report coming out. And if you don't understand what this means, for the first quarter of 2022, GDP came out as negative. So, a negative GDP is often one of the first signs of a recession. Specifically, when you have two consecutive negative GDP quarters, that's a very, very keen indication of a recession, right? So, the first quarter of the year was negative. So if the second quarter report comes out for tomorrow as negative, that would be a very big sign that we are in a recession. Now, the thing about this is the fact that that doesn't 100% guarantee it. It just makes it extremely likely that that is what's going on. The report is coming out tomorrow, I believe, at right before the market opens. So this will have an effect on the market, at least to some degree. And I think that the degree in which this affects the market depends on interpretation. So just to make this clear, look, if we have two consecutive negative GDP quarters, that the market could kind of interpret this as a very bad thing and actually kind of crash. But at the same time, the market could also argue that, oh, we already went through this, we already knew this. And considering what Jerome Powell said yesterday, which would be like today, the market may not respond as negatively to this. So it's really just a matter of interpretation, which is why I'm very, very cautious about this. But I want to talk about something else important. Jerome Powell, the chairman of the Fed, he said something very interesting. So the first thing he did was he announced that the federal funds rate is going to be going up by 75 basis points. That is what they ended up doing, which is actually good for our economy. They're finally starting to address inflation more aggressively. However, he was asked some very important questions. He was asked by someone, hey, if the second quarter GDP report comes out as negative, what would you do in response to this? Would you consider this a recession? And he kind of responded in a very, I would say, docile way. He tried to be very, very cautious with his words, and he stated that he would not consider that a recession. He said that he thinks that right now in America, unemployment is nowhere near as bad as what it would normally be during a recession. So he thinks that even if we get a negative GDP quarter, right, we wouldn't be in a true recession. He didn't necessarily see it that way. He also mentioned that considering the alternative factors, the entire sector in the USA, all sectors are not collectively dropping the way they would. So it's just his interpretation and his understanding. But if we look at data, it kind of suggests otherwise. He also mentioned that he would be open to being a little bit more aggressive if the data allows that. So in his opinion, it's really just based off data. And that's essentially how he kind of left us off. He was very careful with saying nothing that would be too hawkish, which is why the market ended up doing okay. So when it comes to a potential recession, one of the signs of it would be a big decline in earnings. And one of the things that happened was Meta, which is the Facebook parent, they had earnings that just came out, and you could see they actually missed on almost everything just slightly. They actually missed on both earnings per share and revenue. So right here, you could see their earnings per share was $2.46 versus the $2.59 expectation. The revenue was about 28.8 billion versus the 28.9 billion expectation. So they were a little bit off on revenue, they were more off on earnings per share. And as a result, this is just what we had anticipated for this quarter, seeing the federal funds rate go up. Now, another thing that's big for tomorrow, just to remind you guys, watch for the GDP report. This is going to be huge. We also have the giants reporting their earnings. We have Apple and Amazon both reporting earnings after the market closes tomorrow. That's going to be pretty big as well because these are multi-trillion dollar companies. This is going to be big because what essentially happens during a recession, or and this is kind of like what Jerome Powell was kind of talking about, we're going to see demand go down in many different sectors. So a lot of Americans are not spending as much money as before. And because of this, we could see both Amazon and Apple's earnings actually kind of miss. That's a possibility. And if that's the case, if they miss by a big margin, the whole market could actually respond negatively to this because these are massive companies worth trillions of dollars. So am I guaranteeing that's going to happen? No. It's just a very important warning I have. And this is something that's going to come out tomorrow when the market closes. So be ready for that. So, with that said, I think there are kind of like news and maybe earnings that are kind of pointing in a more negative direction for the next couple of days. But from a technical standpoint, I think I'm a little bit more inclined for Tesla to drop a little bit more for tomorrow. So I just want to break this down for you. When we look at SPY, the SPY looks very tricky right now. The SPY made a nice move up here to about 402. I did talk about the SPY kind of filling this gap if we did see some pretty good earnings, and not earnings. I mean a 75 basis point hike. But what we're essentially seeing is the SPY has this massive gap right over here. Let me actually close this horizontal line. See this big gap up here? This is an indication the SPY might drop kind of soon. But at the same time, on the daily chart, we're actually seeing a potential 1348 EMA crossover that could actually end up coming. So even if this does end up coming, this could be a sign that the SPY has a little bit more room to run up, just maybe another 10 or so dollars before getting a big rejection. But I don't think that's going to affect Tesla as much. I think Tesla's going to kind of divert from the SPY a little bit more than before because the Tesla's up like 6.17% for the day. We also got the 1348 EMA crossover already right here. We are continuing to push up, but at any given moment, this thing could start to drop down because of many different factors. So let me actually show you why I think I'm a little bit more in favor of the bearish side for Tesla than bullish side. If we look at the 5-minute candles, you can see we have this big gap that formed again, and that's in addition to the other gap that formed. So let me show you the two gaps real quick. Tesla has many gaps down now. We have this giant one all the way down here, taking it down to that 740 range. I don't think this is going to get filled that quickly. It's going to take time. But this one right here, this gap down here around that 776 range below 780, it seems like that's going to get filled relatively soon. And it does look like Tesla's getting close to that rejection zone. We're already read in the after hours due to Meta's earnings. And I can't really guarantee a direction. It's really hard to predict because it depends on how the market responds to the GDP report and maybe other earnings. But right now, I do think downside is more probable for Tesla. And I do think we're going to get rejected somewhere pretty soon because of the fact that there's this gap down here, also because of what the data is suggesting, because of the fact that we are seeing some signs of a recession and the market may not respond as positively to a negative GDP. So let me actually show you this. So this is essentially what the chart looks like. I'm going to make this a little smaller. What could happen tomorrow is Tesla might get a run like this. Maybe we push as high as 840. Who knows? Maybe that happens. But if that's the case, it seems very likely like the resistance is going to be very strong. Tesla might get a rejection and start kind of dropping from there. And I wouldn't be surprised if this thing starts to kind of drop like this and slowly drops to about that 800 level. Now, 800 is going to act as support for Tesla. I can't really guarantee if that's going to break below that. It could actually break a little below that. I wouldn't be surprised if we actually close in the high 700s for tomorrow. So that's essentially how I'm seeing this thing moving. I am a little bit more in favor of the bearish side, but I can't guarantee that essential gap fill from there. I don't know if we're going to go all the way down to that 776 range. That's a risk if we can't hold 800, but it may take another like 2 days for us to actually get that low. So maybe by Friday. But as of right now, I would just kind of end it from here and say I wouldn't be surprised if Tesla does end up closing around the high 700s or even a little lower than that. Now, a more bearish possibility, and both of my possibilities are more in favor of the bearish side, would be we just start dropping from the opening after we saw the earnings report come out and also a negative GDP, which is most likely what the Atlanta Fed ended up stating, and other factors like that. So we could just start dropping from opening tomorrow. And if we can't hold 800, which I think we most likely won't, this thing's probably going to start coming down like this. And if we are going to be even more bearish, it is possible for us to fill the gap down here. So be on the lookout for that gap around that $770 level. Tesla could end up actually testing that for some time and maybe get a bounce and close around that 785, 786 level. So I am a little bit more in favor of a bearish move for tomorrow based off the data, based off what we're seeing from earnings already, as Meta actually missed on their earnings, not to mention the fact that GDP is probably not going to be the best. And the market, what it tends to do is after these big reports that come out, especially after FOMC, if the market does kind of get a bit of a pump on a Wednesday, typically on Thursday, the market could actually kind of react in the opposite direction because this was just a temporary pump just from Powell's words alone. So I want to warn you guys about this. Does this thing have a little bit more room to maybe run to 840? Maybe it does, but we have very strong resistance in these ranges, and we have a tendency of getting rejected from there. Historically, you could see Tesla got rejected off 842, and this thing dropped all the way down to about that 768 range. So if we do go that high, I would be on the lookout for a rejection. And if not, if we start dropping from the beginning, expect a move more like this, in my opinion. So I don't want to promise this. I just think it's very likely based off the data. And another big piece of data is based off what housing is showing us, because housing does make a big percentage of our GDP. These highlighted regions are when we are in recessions. And you can see the supply of housing, new housing, it goes up during these recessionary periods, because what happens is the demand for housing goes down. And what's happening right now is we're seeing a very similar trend. Look at the supply, it's just going up and up and up. Ever since the Fed announced the federal funds rate is going up, we're seeing the supply of housing going up as demand is going down. Specifically, it started, I would say, as we started this year, which is in unison with when the Fed has been raising the rates. So what's happening is the Fed's raising the federal funds rates, so the cost to borrow goes up, and this is also causing mortgages to go up. The rates are becoming more expensive, so Americans are not as interested in buying houses as much as they were before. Once again, another sign of a recession. Um, in my personal opinion, I think a recession is most likely going to come, even if some people are making the claims that it's not showing as soon as it is. I still believe it's going to come, and I think that unemployment may start to go up soon as we're seeing some signs of major companies starting to lay off their employees. I don't like to sound pessimistic, but I think this is what the data is suggesting. And with that said, I would be very, very cautious when it comes to the markets. I wouldn't be extremely excited and just like partying right now. I would just trade it on a daily basis and just be very, very careful with the moves you're making. With that said and done, pay very close attention to your technical indicators and be ready for almost anything. If we actually look at what we're seeing right now, just to make this really brief, I could bring up like the 2 hour candles just to make it easy to see. We could see right now the RSI had picked up. Right now, it's still a little bit lower than where the previous levels were. We're not necessarily in that oversold range. If we do end up touching the same level and the RSI is lower, that would be a bearish indicator because we're losing the strength we had before. And what's generally happens is we see this kind of like a curl shape here. We could see something similar with this strength going forward, and that's why I am anticipating a move like this, considering the gaps that we're seeing. Now, as far as the EMAs go, I'm not seeing that 1348 EMA crossover on the daily yet. I could actually pull up the daily charts. We still have that crossover up, but it will take a little time for this to kind of subside. And I don't want to guarantee we're going to drop this low. I mean, it is a possibility, I do think it's very possible for Tesla to trade below 800 for tomorrow. With that said and done, I mean, I think I've made this very clear. I am a little bit more in favor of a more bearish move for tomorrow and maybe for the near term. Friday could be a little bit different though because of PCE. It's probably going to come out very good as positive, so the market could respond a lot better. But right now, just remember we have GDP for tomorrow and also Apple and Amazon's earnings, and I think other big tech stocks as well. But those are the main two I'm going to be watching. So be prepared for tomorrow. It's going to be a big day for the markets. Be prepared for anything and pay very close attention to the key support and resistance levels. Just a reminder, we have very, very strong resistance at 840, also around 830, but specifically, I think 840 is a little worse. Then support should be around 800, 776 to 780, that range right there. Then 752 and then 740. Those are the key zones to look out for. Please stay strong and be ready for tomorrow. A big day is coming. Thank you for listening. Have a great day, and I'll see you guys in the next one. Tesla to the moon, because the long-term future is still very bright, but the short term is still very capricious. And peace out.